What's up, guys? This is Ty Zen, and I'm broadcasting off of the highway here in North Atlanta. In this video, guys, I want to talk about a little bit about the difference between short-term versus long-term ICO investing. Okay, we have a lot of people who are looking to flip ICOs, meaning that they want to buy the initial coin offerings when a new coin comes out, and then they want to flip it, and then based on that, after they flip it, take that money, the profits that they make, and then go flip another, invest into another ICO, and then go and keep flipping it like that, right? But I want you guys to be aware of something as you guys are doing that the ICO flipping used to be really good in the past, where you can do that and pretty much almost get like a 5x or a 10x return on your money. That means it's a 500 to 1,000% on your money. But right now, because the market is a little bit more saturated, it takes there's a couple of things that's slowing that process down that prevents people from being able to flip an ICO. So like back when we were getting into like waves and Lisk and stuff like that, we were expecting like a 5 to 10x return, like a 500 to 1,000% profit from that. But because of the influx, everybody's putting out new ICOs all the time. The market is saturated, so it slows it down. So there's not as big of an opportunity like that like it used to be. It still is, but you just have to sit on it and wait. So when you get into these ICOs, you can flip it, you can get into it, and then the minute that the coin is available and is released on the market, you can trade it and make you anywhere between 50 to 100, sometimes 200 or 300% profit on it right away. Within a day or a week after the ICO comes out, the coin is made available, is delivered to everyone. But whenever you guys invest in an ICO, you have to keep in mind that the purpose of the ICO is no different than a stock IPO. The software team is trying to raise money so that they can they're trying to raise money so that they can pay for the software development. And let's just take the example of someone like Sasha Ivanov from the Waves platform in Moscow, Russia. The minute we give him the money, he's not going to be able to get the money right away. He's going to get the money right away, but he's not going to be able to use it to pay for developers right away. He has to put out, start hiring people. He has to create a roadmap for the project and then start hiring people to work on it. So that takes time. All these software projects, it's going to take like a year or 2 years before any one of them can build even half the features that they want to build on it. So when you get into these ICOs and you expect it to go up 3, 4, 500, 1,000% profit right away, to me it's not very realistic. You got to get into it like with the Ethereum. When we got into the Ethereum back in the summer of 2014, it took us about 20 months to get that 4, 5, 6,000% profit on it. So this is all the ICOs. Whenever you guys hear me or LeonFood.com get into it, these are all basically long-term plays. They're not something that you jump in and out and things like that. Now, there are coins that are out already that if you miss the ICO, you can get in on a short-term trade or even a longer-term trade based on the fundamentals of that coin. For example, like when I got into Factum, I got into it. I got some short-term trades out of it during the first run-up to like 860,000 Satoshis. So I got in on that for a short-term trade. But then after it fell back down and I got back into it again, that right there, I got into it because on fundamentals, the contracts that they got with the United States Homeland Security and several other contracts that they are working on. And when there's announcements like that, or there's news like that of them getting these partnerships, then you really have to let those events pan out so that it can play out, so that the value of that coin goes up before you're able to make money on it. So just want to make this quick video, guys, because sometimes I get people asking me, whenever I talk about a specific cryptocurrency, they think that should just automatically go up at 5x or 10x. And some of them, if they have a smaller market cap, they will, simply because Leon and I are discussing it on our channel. But most of the time, whenever we talk about getting into an ICO, it's because we think that there's a long-term potential. Like, for example, when Leon got into the Stratus platform ICO, and he got into that during the ICO because he has a bigger Bitcoin portfolio than I do. I have a smaller portfolio than he did, so I could not take the risk of getting into it early like he did. Now, here, keep this in mind. So if he got into it during the ICO, it was around 1,100 Satoshis, and now it's floating somewhere around the 6,000 Satoshi mark. And even when it was at the 8,000 Satoshi point, he did not sell it because he saw a long-term potential for the Stratus platform. You guys hear sometimes people jumping in and out of trades and things like that, or different coins, and I'm here to tell you guys that the money is made in the long-term trades. Once in a while, there's an opportunity to make a quick buck and in a short-term trade, but the majority of the money that Leon and I make usually are in the range of several months, holding a coin for several months. We do the research to find out which ones are really legit and which ones are really worth holding on to, and after that we get into it, and then we'll hold on to it for several months. And when you're holding on to it for several months, there's really not a stop loss that's being used, because you are investing in the software project to succeed. So the stop losses are a little bit wider on those projects, simply because to account for the volatility in the price, because it's the cryptocurrency market is such a low liquidity market that you have to give it a wider stop loss. Okay, if we're trading something like Bitcoin or Ethereum, then there's a higher liquidity issue right now. So because of that, we're not gonna use such a wide stop loss. The stop losses are gonna be a little bit tighter. Okay, in the case of something like Factom, the stop losses are even extra wide, simply because my friends are down in Austin, Texas, where the Factom headquarters are at, and Leon is down there, and the Factom headquarters is down the street from where he lives, so he's able to go there and pick their brains and go to their meetups on a weekly basis to get caught up on where they're at with their software project and their development. So because of that, it's a lot different approach. So each cryptocurrency that we get into has a slightly different risk parameters. So I just want to share that this video with you guys, so that when you guys get into the ICOs, you don't think that the money is just going to be made immediately as soon as the coins release. Okay, I actually prefer the ICOs that do not release their coins for several months after they receive their funding, simply because I know that after they get their money, there's no way that they can build their software features and stuff within just a few weeks. Okay, so I just want to make this video for you guys so that you guys are realistic on how long it takes for an ICO to be profitable for you when you invest into it. Thanks for watching this video, guys, and if you guys like it, give me a thumbs up. If you guys don't like it, give me a thumbs down, and I'll look forward to seeing you guys in a future video.